G'day folks, welcome back to another share update, and today we're looking at Caterpillar. Been asked to do this by another viewer. So Caterpillar is actually still in a bearish divergence, still in a downtrend, and I'll go through the charts in a second. But first, looking at the outlook for performance, Caterpillar recently faced a mixed third quarter 2024 result, with revenue slightly declining but maintaining a strong EPS growth outlook for the fiscal year. For the valuation, trading at a PE of 17 to 1, it reflects a moderate growth expectation. High free cash flow of $9.8 billion bolsters its balance sheet, despite a high debt equity ratio of 1.95. Analyst sentiment maintain a buy rating, though the average forecast indicates a potential short-term decline. Dividend strength. As a dividend aristocrat, CAT recently reaffirmed its $1.41 quarterly dividend, providing income stability amid cyclical industrial demand challenges. Now, that dividend strength is a factor because I got a query from another viewer regarding ZIP, which I just did recently as well, another share price on the ASX, Australian Stock Exchange. And I do say in my videos, especially on the Patreon page, I do say I prefer to buy stocks which pay a dividend. And that's because if the price goes against you, at least you're getting some level of income. So again, just be mindful of that. It's not a mandatory, but it's a preferable strategy I use. So as always, we do look at the long-term charts. Now, before you go any further, make sure you hit that like and subscribe button to support the channel. So here we've got the monthly, the weekly, and the daily. On the monthly, it's still bullish on the price chart above its moving averages. And for these moving averages, by the way, you can find them in the description below to learn how to draw them. The price is still very bullish, has been for some time now, since October 2022. But notice the CCI is broken into that moving average range and just slightly broken above that range at the moment, current month, although it looks like it might be declining again with this current bearish candle on the monthly chart. On the weekly, notice here we had a couple of bearish divergence, and I've marked them here with a rectangle where these divergence can actually retrace back down. Now, we've got currently this bearish divergence. You'll notice here the CCI is still dropping, even though the price is rising. That's a bearish divergence. And if I was to draw a Fibonacci from that high to that low, let's go from that high to that recent low there. You can see there that's the minimum range, that 38% level. And depending on where you draw these are a bit subjective, but I'd prefer to go back to the previous low before the divergence started. So even at that range, you can see there that the 38% level is still within range. But to go back to this significant low, you can see there that 38% level, and I'll mark that for future reference. So we go from that level down to about there. That's our immediate short-term target, assuming the price starts falling from there and the CCI is falling. And this is on the weekly, of course, and it could actually drop a lot lower. We can't tell how far it's going to drop, but it could actually bounce out of that. But that's the minimum range it'll fall to. So again, that's the minimum on the weekly. On the daily, we have another divergence. You can see there, hit this resistance up here at 423, and it's declined back from that level. And you can see there, it's hit that, if I zoom out, it's hit that recent Fibonacci range, that 38% level. It's hit that down to the 38% level, and it's bounced out of that, currently retracing back towards that 38% level again as we speak on the daily. So again, that's a weakened sign. If I zoom out again on all three timelines, you'll notice the monthly is weakening on the CCI. The weekly is also bearish, and the daily is bearish. Now, if we go to the intraday, now, even though you might be trading on the daily, remember we trade in the direction of the higher time frame, we still look at the hourly chart as well. What we're looking for is a divergence, and sometimes divergence appear more on the hourly time frame. So you can see here we had another bearish divergence, higher highs on the price versus lower highs on the CCI, and that, again, if you draw a Fibonacci between that high and that significant low, you can see there that hit that range. Oops. If I put it back down to there, that level there, you can see it hit the range and it bounced out of there. So again, that's a minimum range it hits. It could go a lot lower, but at the very least, more than 90% of the time, it hits this 38% retrace level, if you follow my videos. But at the moment, do we have any other divergence? that CCI seems to be moving in line with the price, so there's no divergence to see there. So at the moment, that's looking okay. But again, zooming out on the higher time frame, the daily is bearish, so don't take any long trades. If I go back to the weekly and daily charts here, oops, we want to go in the direction of the higher time frame. So if you're trading on the daily, consider the hourly, but also look at, so in this case, I'd like to see this break higher on the CCI. But before that, and before I buy anything, I'd like to see this break higher on the weekly as well. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.